Okay, welcome to 3.12.3 activity analysis. First and foremost, this is probably the simplest analyses to understand out of the three, being liquidity, solvency, and activity. Okay, activity in and of itself, anytime you hear activity in the world of financial accounting, we're talking about profits, profit margins, increase of assets, basically to generate sales. So just by this illustration alone, and I'll reiterate this through terminology, we have multiple units here of something, okay, our product, okay? The goal here is to increase profits, total revenue, total costs, variable costs, okay? Bottom line, to increase profits. Now, the thing with activity analysis in the world of business and financial accounting is that we're talking about generating and being able to convert all assets and cash into sales. That's the key. And that's what makes it so much different than liquidity and solvency analysis. The first two are concerned with paying off short and long-term debts. This is about converting currency, okay, into one form, all in all, while increasing sales. Okay? So consider activity ratios as financial analysis tools, okay, first and foremost. Now, all ratio analyses are tools, but as you can tell from liquidity and solvency, it's more of ability, okay? This is actually a tool, okay? Now, this financial tool measures the ability of a business, like we discussed, to alter various assets, okay, and they can be all different types, okay, liability and capital accounts into cash for sales. Now, that takes some skill, but all businesses actually know how to do it, and it's actually just basically generating as much revenue as possible, all different ways. And this will allow a business to measure this particular ability, where you're going to take assets of all kinds, fixed, intangible, etc., liability accounts as well as capital accounts, because those liabilities, okay, are not our friends. Those are our expenses and other things we do have to be concerned about, but other capital accounts, and how we can convert them all into cash or sales. That's big. That makes us more profitable. And that puts us in a place where it's called a surplus of capital. So if you see that term again, that is attributed to activity analysis. Okay, generating as much activity as humanly possible and being able to convert it into cash or sales. But remember, it deals with assets and the liabilities. And that will be able to lead us to a cash or sale generation, which we then have a surplus of capital. Now, another fast fact. The faster a business is able to convert its assets into cash or sales, that operation will run much smoother, because this can happen all within 1 month, each month, every month of the year, or once a year. A lot of businesses, depending on what size, small, medium, or large, or a corporate entity, larger corporations have a much easier ability to do so because they have more assets, more resources, and more liabilities too. But nonetheless, you're selling a product or reselling a product. Most companies that we're talking about that do this are companies with costs of goods sold, okay, where you're selling goods and being able to convert those into cash or sales. Does it necessarily wipe out companies that provide services only? No, but by and large, when we're talking about activity analysis, we're talking about a company that generates sales to increase profit, okay, to be able to convert these assets into cash or sales. And here you have a very old yet effective show of a circuit flow of money demonstrating activity analysis, where they had a consumers fund receiving all types of incomes, okay, showing all types of activity and payments going out. They also include natural resources and liabilities such as rent and other wages paid out, including interest, okay? But as long as you're able to convert that into cash or sales, especially payments to manufacturers, et cetera, now these are all liabilities and expenses, okay? But if you can convert that into cash or sales based on your assets, in turn, you're going to increase total assets. And that, my friends, is the conclusion of this module.